Hello, my name is Eduardo Lee, and this is my individual project analyzing the case of Markowitz, Allen J. CPA. We're gonna talk about the background, background of the person, and discuss his qualifications and the type of person he is, which is gonna rely a little bit on based on assumptions, but yeah, it is gonna be disclaimed in the next slide. Then we're gonna talk about the incident and the violations that he caused during his auditing process of FTE, which we're gonna later discuss. We're gonna talk about the incident information, like the violations, and further discuss on why he would have done that. Then we're gonna go to the post-incident, or what happened to the person after the incident, and then give some personal thoughts or what I learned from this case. So, disclaimer, the purpose of this presentation is to observe the public findings surrounding and related to an individual CPA that has been sanctioned by the Securities and Exchange Commission or another state board of accountancy. Using public findings, we're trying to get a better understanding as to why the person in question did what they did, so that we can avoid similar pitfalls and as we start our careers in public accounting. The presentation will also include assumptions so that we can get a better understanding as to why the individual did what they did. So here's our guy. His name is Markowitz, Allen J, and you can have a better picture of him on his LinkedIn account. I decided not to put it because I might cause some troubles to myself if I do so. Currently, he's a 66 years old man. He worked both on New York City and New Jersey offices, and for both audits, Markowitz served as the lead engagement partner for Martin LLP until 2024, when the company merged with CBIZ, which we're gonna later discuss on the aftermath. And I think the main important information in this case would be that he performed Martin's audits on FTE through 2014 to 2017. So, going forward a little bit on the background, he attended Fox School of Business at Temple University. He got a bachelor's in business administrations and accounting and finance. He seems to have approximately 50 years of experience today, and 40 prior to the incident. He worked for Martin LLP as the firm SEC and Food Beverage Practice Group, and prior to Martin LLP, he was a partner of JH Con LLP. And as you can see, based on this information, he is a pretty good qualified guy. He had 40 years of experience. He's a pretty educated person, and he probably took classes on ethics in order to get his CPA license. So, what caused him to do the things that he did? Well, let's explore a little bit further. So here's the incident summary. If you want to read everything, just pause and read it. But one of the main things that he did, or the main points that I should point out, is that he engaged in proper professional conduct within the meaning of the Section 4 of the Exchange Act and Rule 102, which, well, if we talk a little bit further when we go to violations, well, he basically improperly do his job, and either because he lacked integrity or engaged in ethical or improper professional conduct, or one of these one of the points. But based on the information I got, it is probably the number 2 here, to be lacking character and integrity. And going a little bit further, he did not follow the accounting auditing standards of the PCAOB, or Public Company Accounting Oversight Board, and he did not follow the standards, which would make sense with the improper engagement in professional conduct. And Markowitz also violated several PCAOB standards when he was doing the audit with FTE by relying too much on FTE's management, false representations, and corrupting practice, which means that he was just following rules. He wasn't really thinking about himself or really were really willing to define the company and what they were doing, which was a lot of illegal practices. So here's the violations. If we go a little bit further, he also calls Martin to violate Rule 202b1 of Regulation XX, which states that the accounting report shall state the applicable professional standard under which the audit was conducted, which he did not, because um, he was not following the standards when he was doing this audit. And did did the SEC give any punishments to this man? No. Actually, let me go a little bit back and talk about the violations. Well, I guess I would looking at what he did, it's probably that he preferred to ignore it in order to keep the client. I think the main reason for that is that he has 40 years of experience. He should have known that he should have been a little bit more forward and probably auditing the person better. But instead, he just decided to ignore it and just not following the standards of the PCOB. And that what caused him to get into trouble, either because the company was giving a lot of money and he maybe thought, oh, maybe I should let it slide, and let them still do these illegal things. And he probably did that because he had like 40 years old of experience, and he was a pretty smart guy. So it wouldn't make sense to let those things slide unless he knew what was happening. Or a second option would be that FT's management was really convincing, talking about, oh, maybe deceiving the man to believe that the things that they were showing off were illegal, and he wasn't able to catch that up. Now, going to punishments, he did not receive it. Thankfully, he did not receive any punishments, and most of the fault went to FTE. But in case he did receive any punishments, he would have to have a hearing, which he did in order to explain everything. He also and went to court by appealing to the SEC and Jersey amendment, in which he said that his case was being violated by the case was violating his F7 amendment. But I mean, I'm already discussing it. Oh man. Okay. Well, given that he was found guilty, he would have his license revoked and having to make some monetary compensations, which did not happen, thankfully. However, he had to make a hearing. He had to the whole process that took around like a year or so until everything was settled. And although there isn't like further information about what happened to the person, I had to make some assumptions, such as having his license not revoked since he still have it. But it seems that his case was dismissed, and all the fault went to FTE's management. And as you can see, here's some proof that he did not get his license revoked, both in New York and New Jersey, since they're still active. And I was trying to look at the enforcement action, and there wasn't anything talking about it. So, and the aftermath, he seems to be fine. He's still working. He's probably not working as a CPA anymore, although he still have his license. He's now taking the management director position at CBIZ, which helps small to medium companies, and he seems to be fine. And some personal thoughts about it is that you should be really proactive and try to conduct your auditing, and not be always doubtful about the companies that you're working at, because they may deceive you and not show the right things. And even if you realize that, you should go through and do the right thing instead of maybe just ignoring it, or just not decide or overseeing it, because you're just letting the company to keep doing this illegal thing until they're eventually caught, and you're also gonna get in trouble because you let it slide. And also make sure you're working with an ethical company, because if you do not do so, you're probably gonna be in trouble too. So that's all my thoughts, and thanks so much for listening to my presentation.